Lots to watch, as I said, here at home. Let's take a quick look at SPI futures. It is expected to see weakness today at the open for the broader market, down 40 points. This really an Aussie dollar story because we did see gains, as we know, highest level for the Dow since August of 1984. What a move for US markets. We are not seeing those moves here at home. And as I said, that is an Aussie dollar story. So let's bring in Peter McGuire for more from XM. He joins us live here in studio. Peter, pleasure to have you on the program, as always. Talk us through this one because it is all about the Aussie dollar moves at the moment, above 73 US cents. This, though, in turn, is a US dollar story.
Absolutely.
Why are we seeing the weakness? Is it expected to continue?
Good morning, Ingrid. Yes, I think it will continue. We're down from 103 in March to 92.5 or 92.3 this morning. It's been a wild gyrating on Thursday and Friday with Powell's comments. We've come onto I think the platform, which is it's game on for the Fed to make it game off as far as interest rate rising, probably over the next decade. So there we go, and US dollar will come under further pressure to the downside. Aussie dollar will lift on strong Chinese numbers, and I think that's the storyline, Ingrid.
Well, we've got the election uncertainty mounting. You say perhaps the Fed may drop a summer bombshell. What are you talking about here?
Well, they may do. We've just got to see what those NFP numbers, non-farm payrolls, this Friday. We're currently at around about that 10.2% unemployment numbers. There's analysts are saying 1.5 million jobs or 1.55 this Friday. Yes, it's a great increase, but remembering that'll only take you to 9.9% unemployment. We were at 3.5% going back, 9 months ago or 8 months ago. So they're the numbers. Quite simply, yes, the Fed will do whatever it has to do to get to where it has to go, and Trump's making strong rebounds. So it's going to be a very interesting 2 months out. September and October. We're off on the I think it's about 12 weeks tomorrow.
Yeah, crazy. I can't believe it's September this week. But when you look at what we're watching from the Fed more broadly, I guess the question here is, what's next over the coming months? The non-farm payrolls, as you spoke about, have somewhat been not irrelevant, but we just know we've known for the last few months how shocking they would be. So markets have somewhat overlooked it.
True.
Is it becoming more and more important now as we get into the crux of things?
Well, I think the numbers, do we hit that 1.55, and how do September numbers look and October numbers look with elections? And the next part of it is, do we see a return to some form of normalcy in the sense of employment numbers continuing to get stronger each month? Or is 2021 going to be really the wake-up call? The numbers coming out of Victoria here and what Josh Frydenberg's worried about, and certainly Daniel Andrews, and is that going to be just a contagion across pretty much the world? A realisation that it's going to be very, very bleak for 2021, and from consumer numbers and, of course, from unemployment.
It's interesting, though. You look at the coronavirus crisis and what we're seeing, and even, as numbers rise and across the United States, we're still seeing it in full force.
Absolutely.
Yet people are somewhat getting back to normal to an extent. Are we seeing that flow through to things in the economy, spending and such?
Well, it's still patchy, and we're seeing these afterpay companies, and I think the credit boom is still maintained in a lot of consumers' mindsets. They're not going to. I saw Sam Zell talk about the US real estate mogul. He's certainly worried about retail sales, but people are buying online. So, my daughter and all her friends, very much the 20-something mindset. They just don't go to shops. So that just seems to be the new frontier. And Amazon's booming. There's plenty of companies that are going ballistic, and there's plenty that are absolutely, tail between their legs, and the next year is going to be harrowing.
Peter, I love asking you about commodities as well. It's what you watch closely, I know. So let's talk some of that. Oil for once. Is that starting to move?
Well, I would have thought so. We had Laura last week. We had the Marco, the hurricane before that. It's really done nothing. I thought there would have been an uptick, Ingrid. We'd be up a couple of bucks with the chance as far as Mother Nature and what impact to oil. Still range bound. So there's been nothing there, even with that US dollar coming off. Crude still maintaining that 42 to 45 handle. And what do we need to do to get it higher? I just don't think there's speculators are out there chasing that fast money on the oil market.
What about gold?
That's where they are. Up 2.5%.
And it's not going to change, is it?
No. It was down at 1940. I was worried about that, I think, and this time last week, it's back up at 1980 this morning.
But are we seeing people add to positions, continuing to pile in, right?
Pile in, and the other side, of course, is investors across the world are piling in because they're worried about the US dollar. The trade-off is sell the dollar, buy gold, and it's a two-way street. So I think that's been the benefit as far as certainly retail investors have been chasing that fast money, and it's been incredibly fast.
And is silver right in the coattails of that as well?
Silver's had better run up.
But is silver a poor man's gold?
No, probably not. It's certainly its little brother, but it's got an industrial demand aspect, which is very, very strong, and base metals have had a nice uptick. Have a look what iron ore's done, have a look at copper. So 2021 might be their sweet spot, but silver's been dynamic. And, when you're thinking of that sell-off, I think it got to about $12.30 or so. It's had highs of $27, $28 since March. So it's certainly outstripped gold.
Laundry list of commodities. Dr. Copper. What about that one?
Dr. Copper, patchy, but there's certainly upward trend and upward momentum because China demand and rebuilding. I think that's going to be the boom for commodities over the next 2 decades.
Yeah.
And when I say that, I just want to say that again for viewers. It's 20 years. We're not talking about for 6 months. It's 20 years to 30 years. Population increases from 7.5 billion to 9.5 billion in the next 22 years, 23 years. So huge boom. Infrastructure spend. That's how governments are going to get themselves out of this. They'll have to spend and spend and spend. Bridges, tollways, you name it, they'll be building it. Underground railways. It'll just be a non-stop event across the whole world.
And so that has obviously an impact. That's a follow-through effect on many commodities, not
Absolutely.
just copper, obviously. That would no doubt
look at agriculture.
Oil.
Think of agriculture. You've got all those extra mouths to feed.
Yep.
So that's why China's been so aggressive as far as Africa, Belt and Road, all of those initiatives. And they realise they've got a country to feed. They're landlocked. They really have got quite poor fresh water, quite poor agricultural lands. Yep. And that's where they've got to look externally. And they've certainly done some very interesting deals in Australia, to put it mildly, and when you're looking at what they're doing in Africa to feed a nation. So this is just a growing concern across the whole world.
Just one more thought from you. Obviously, we talk central banks a lot with you. Shinzo Abe, obviously, no longer at the Bank of Japan. I mean, it's an end of an era.
It is an end of an era.
Abenomics, no more?
Well, no more, and it's going to be, you've got 4 key players that are putting their hat in the ring. It'll be interesting to see. Will they follow the same mantra as far as Abenomics? I'm not sure, but I just want to leave you on this one. The Nikkei hit 39,000 in 89.
Yep.
Abenomics and that low interest rate environment for 30 years in Japan and low inflation numbers. Are we going to copy that, Ingrid? That's the question. It's going to be answered. Are we going to copy that for the next 30 years as far as Australia, US and Europe? Are we copying Japan?
All right, well, we'll leave it there with that rhetoric question, I guess. Because the question, one more thing on that though, when you look at Abenomics, hasn't particularly been successful, obviously, as we know, in Japan.
Exactly.
But as you say, for the last 30 years, there hasn't been much success. Do you think anyone would do it differently?
No, but there's no other way to do it. We're saying that now as far as what you've heard Fed Chair Powell saying, he's not going to raise interest rates in the foreseeable future. I'm saying a decade.
Yep.
So,
and that's not surprising to me, given what's going on.
No, it's not surprising.
No.
So are we going to get the same result? I would think if you get 4 ingredients here and 4 ingredients there and tip them both into the same pots, you're going to get the same result. So that's what we're going to, the same result.
Well, lots to watch. A bit of a...
Gold, Ingrid.
Yeah, gold. There you go. Just continue piling into gold. That's what everyone's saying.
US dollar sell-off, buy gold.
There you go. Peter McGuire, always a pleasure to have you on the show.
God bless. Take care.